Hello.
Hello.
Hi, Shelby.
Hi, Jadine.
We're gonna talk about 3 things that you can do to maintain your credit.
And you can do these today.
Mm-hmm.
Yeah.
So first one that I'm super passionate about is setting up automatic payments.
Mm-hmm.
So I actually set it up when I was on maternity leave because it was the first time in my life that I wasn't on top of like thinking about the dates that dates were coming out. And it's the first time that I felt that stress of like, oh my gosh, I almost forgot my payment. Or maybe I did. I don't think I did. I don't think I did, but I almost did, and I really didn't like that feeling.
Yeah.
So I set up all of my everything that comes out every month, like my cell phone bill, credit card, NB Power. Like I literally did all of them. I sat down and did all of it the same day. Like not the same day that I was late or thought I was late.
Yeah.
I
But
did
set
it
them
all
up the same day. And
like
sure
the
that
next month.
Yeah,
I was like,
exactly.
okay, this isn't gonna happen again. I'm gonna like get control over it. So I feel very passionate about it, especially when someone is like wanting to up their credit or is trying to repair or have like old stuff like credit history things that are keeping their score down or just like
just past bad debts, and they want to ensure to increase their score.
That's one of the
set
best
up those
things
automatic payments
that you can do.
Yeah, exactly.
Because if you have a bankruptcy, let's say, then on your credit bureau reporting, the banks won't, most of the time they won't want to do like with A lenders, they won't approve it if they see like one late payment, like one late cell phone payment. So it's so important. When I talk to like these clients, I'm like, you need to do this, like do this now. And then people are like, okay, whatever, and they probably don't do it, but like I'm like serious.
Yeah, it is super, super important to do that. Just because, I mean, like, we all get busy. We all forget when we have certain things due.
I find it's just the dates are all different. We don't get anything in the mail anymore.
No, everything's online.
We get so much junk mail in our email, so we just don't really like pay attention as much.
Yeah, exactly.
And it's like so easy to forget. It's how I feel. It's like, oh my gosh.
Yeah, it is. Especially, I mean, like, you know, if you've got kids or something like that and you're driving them here, there, and everywhere to their sports, to their friends' houses.
You have to like keep all of that like,
their
mental
schedules, your
load,
schedule, your partner's schedule, all of that in your brain.
Everything
you know
else.
what I mean? Like
it's so much.
Yeah, it's a lot. It's a lot to try to keep track of.
Yeah. And I get it. Sometimes people are like, oh, I don't like them like take. I want like I know you like to make your own payments.
I'm one of those people. It's a control thing. I don't like them to take the money out of my account. I mean, if you think about it, it's just like as if you're paying your mortgage or if you're paying your car loan, they take the money out of your account anyway. You're not sending them the money.
Yeah.
So just, you know what day your mortgage is coming out, you know what day your car loan's coming out, you know to have money in your account for when that happens. So just remind yourself that, you know, okay, my automatic payment for my cell phone bill is going to come out on this day. Make sure I've got money in my account for that.
Yeah. And I mean, you set it up for like the minimum. You can put in minimum, so like your credit card, they won't like go take your whole balance, like whatever.
Yeah, exactly. Just put in like the minimum $10.
The minimum $10,
$50.
So that it doesn't report late on your credit.
Yeah.
Like that's where I'm like super.
Yeah, and then you can make the additional payments that you need to or that you want to.
At your own convenience, whenever that.
Yeah, exactly.
Whenever you're sitting or whatever.
Yeah. Whenever you got your paycheck, you know what I mean?
to make your payment. Yeah. Okay, cool. So that's number 1.
Yeah. Number 2, that one was.
So, people can check their credit themselves to see what's on there, okay? So one of the things that we see a lot of is, and it's usually the same companies, so let's say people buy furniture. I see it a lot with like Accordi or like Desjardins. Anyways,
the Leon's furniture.
A lot of
you
the
buy
time,
it at Leon's, and then they've got like a partnership with Desjardins or something, and the loans through Desjardins, and then Desjardins gives you a credit card.
And it's Accordi. Anyways, we see that a lot with these ones. There might be other ones, but so what happens is that you buy something, you have that account. And then usually they'll like either offer you some like a credit card with it or something else. There's like sub accounts.
Yeah.
So usually that's when we see it the most is when there's like sub accounts internally. Anyways, it doesn't matter. But so what matters is that when people pay them off, most of the time it doesn't update automatically on the credit bureau. So one of the things that we want people to know is that you can check your credit online yourself. So some banks have like an app where you can see it. I know Shelby has.
Yep, a lot of banks do that. Most of them have the credit score app, and you can see your score. You can see inquiries that you've had on there. You can see the accounts that you have open, what the balances are, what the monthly payments are on
And
them.
like old ones too.
Yeah, and you can see all your old ones too. You can see if there's still a balance reporting on it.
So with that, you can see if there's any ones that haven't been updated.
Yeah.
So what we see is that we're trying to get a mortgage in place, and then there's a bunch of debt that we're telling the bank, like, oh, this is an old debt, like it's paid.
It's no longer active.
It's no longer, and so it's just like a big headache for the clients because they need to chase, and it's like super time sensitive, and they're trying to get those letters from the bank or the institution.
Yeah,
or they're
whatever
calling
finance company it was.
that company to try to get something confirming that it was paid, or like look through their old receipts or all that stuff. It's just a lot to like look for in like a short period of time.
Especially when you're packing to move.
And when you're trying to buy, buying a house, it's like it's not the time. You don't want to go back about old debts
and
that
try to
like
figure
should
that
have
out
been
at that point in time.
updated.
Yeah.
Right.
So I mean, like when you pay off a debt, like one of those types of debts, maybe check it a month or two on one of the free credit reporting agencies. You can Google it. There's tons of them out there.
Right. Yeah. If you don't have like an app, there's like Credit Karma. I think maybe Borrowwell.
Yeah, that's free as well. I don't know
probably
other ones, but those are like the two main ones.
Yeah.
And you can check on there to see if it's been updated after a couple months if you paid it off. If it's not updated, contact Equifax, contact TransUnion, get it updated because you're going to want to contact both creditors or both credit agencies because, just because you updated with Equifax doesn't mean it's going to get updated with TransUnion.
Right. Yeah, that's true. Yeah. And also you can do like, if you do see a debt, like an old debt, I mean, like, let's say I was going on there and checking it and seeing something that wasn't updated, like it still shows a balance, but and it's been paid for years. Yeah. You can do like online with Equifax and TransUnion.
Yes.
It's a
like an online dispute form.
Yeah. And then they'll look at it and send you a letter and confirm if they like was able to take it off or whatever.
Yeah,
right?
exactly.
So
they'll confirm. They'll advise you the result of their investigation on that debt.
Yeah, investigation forms. That's what I was trying to say. So you can do that. It's better when you're not stressed about trying to do something, right? Like getting a transaction done. To update, to check, and then there's no time frame. You just like, you see something and you update it. Like,
you can do it on your own time. You're not sitting there stressing about it, being like, when is that bank going to call me back?
Yeah.
I need to get this to my broker because they need the file to be complete minimum 10 business days before closing. And we're at 11 days today.
Yeah, stuff like that. Yeah. And then sometimes it's like, it takes like 5 to 10 business days for them to send you a fax.
Yeah, exactly.
So
it's something silly like that.
It's just so much easier to check when you're not trying to do anything.
Yeah.
So check. So that's number 2. Make sure you check what's reporting.
Yeah.
If everything's up to date, if it's reporting properly. What was number 3?
I think number 3 we were going to talk about utilization and balances. Was that it?
Yeah, it was.
Okay. Yeah.
So basically, when you're like something you can maintain your credit, right? Okay. So what were you talking about?
So to maintain your credit, to ensure that you have like a good credit score, is to not exceed, and we talk about this in a lot of our videos, but just to reiterate, not to exceed a 30% utilization on your credit cards. For example, if you want to up your score quick and you've been carrying a little bit of a higher balance, you've got some money sitting in your savings and you're wondering, should I hold on to this money in my savings? Should I pay off my credit card? I'm going to be looking to, finance a vehicle or finance whatever shortly. If it's a house, if it's any type of loan, when you think about it, should I keep this money in my savings or should I pay off debt with it? You should pay off your debt, bring your credit card down to 30% of the balance, because your credit score is going to increase that next month as long as you keep the balance nice and low on it, because it's like a snapshot of your borrowing from the previous month.
Right.
So again, high utilization is going to result in a low score. Low utilization will result in a high score. And then if you are looking to get financing for something, say an auto loan, for example, because interest rates can vary so widely with auto loans, the better your score is, the lower the interest rate is going to be. And no, 6% is not a great interest rate on an auto loan.
I mean, like if you're buying a secondhand.
Yeah, secondhand, it's good.
Yeah. Like a brand new.
Yeah, brand new now. Yeah.
I've seen like
so that way you can get, you know what I mean? That way you
Yeah.
can get that low interest rate if you're buying brand new, or you can get the lowest interest rate available if you are buying secondhand.
Yeah. Yeah. It's just to prepare, like just be prepared before you need it.
Yeah,
kind of
exactly.
thing. I mean, so generally, if you read stuff online about the utilization, so like lines of credit, credit cards, it's gonna say like under 75% of the balance.
It's really 30%.
Is it 30?
I mean, 30% is the sweet
30%.
spot to bring your score up.
Okay,
Yeah.
gotcha.
Yeah.
But I think it's like 35% of your score is how much your utilization is.
30% is 35% is the payment history.
Okay, yeah. Anyways, it's a lot.
Yeah, it is.
So when people pay down their card,
Makes a
at
big
least
difference.
like half. At least half.
Yeah.
I say half to people. Just like start with half.
Yeah,
And then
yeah.
if you can bring down.
Then if you can get it down to 30%, great. But as like if you get it
At
down to at
least
least half, then like you're still
your
gonna
score's
see
gonna
an
go up
increase.
quite
Yeah.
a bit. Usually,
Yeah.
it usually jumps like enough like that. We're like, whoa.
That it makes a sizable difference to your credit score. It makes a difference on your application. It could be to make it or break it.
Yeah.
Yeah.
Oh, okay. It keeps going when that happens.
Yeah.
Yeah. My battery's low.
That's okay.
So yeah, it's basically it's just to keep your like and don't go over your limit. Oh my gosh. I know we
Going
say that a
over your
lot.
limit is the worst
That's
thing that you
gonna
can do for your
shoot
credit
down your
score.
score. It's gonna bring it down.
Yeah. Yeah.
Like,
and you'll
for
think
sure,
that you're doing good on your credit, but it's not if it's reporting over the
Basically,
limit.
it's like every effort that you've done up till that point, it goes down. Like it
negates
brings
it,
it brings it all back down.
Yeah.
It can go up again pretty quickly, but it's just you need to
It's
get
just
it.
you'll
at
be
least
disappointed
under-
that 1 month.
Yeah.
You know what I mean? Now
Yeah.
you've got to wait 30 days and get that debt paid down
and
in
it's
order
just
to
more
see
to
it climb
pay
back
off
up.
too.
Yeah,
like, to try to
exactly.
bring it down. So yeah, definitely don't go over your limits. Bring it to half if you can, or work on it.
Yeah.
That's the goal.
Yeah.
Minimum half is what I usually say. 30% is the main big goal. is
Yeah,
what I
exactly.
say.
Yeah.
And also, actually, one thing that we can say is that it does the same if you up your limit.
Yes.
Then if you're so let's say I say that to people that have like a $500 credit card.
Yeah, up your limit.
Up your limit because it's too easy to go up or to utilize
That
most
30%.
of it.
Yeah, exactly.
Yeah,
If you make a larger purchase on it of $250,
you're already
there's
at half.
50% utilized
Yeah.
right there. You know what I
Yeah.
mean? So increase
So-
your limit if you are eligible to do so.
Yeah.
And I mean, obviously,
But
if
don't
you're-
use it. Don't use that
Yeah,
extra.
exactly.
It's just it does the same thing.
Yeah.
As if you're paying it down to half, but if you up your limit, it does the same effect.
But
on
I
the
mean,
credit bureau.
if you're maxed out on your credit card or very close to limit, it's
They probably
unlikely
won't.
that they're not going to approve you to increase your limit at that point.
Mm-hmm.
So you are going to have to pay it down. But then once you do get it down, once it's been updated on your credit bureau, call then at that point, see if you can get your limit increased, because that's a better time to get it increased, because banks are always more willing to extend credit to you when you don't need it
don't need it.
than when you need it. If you need it and you're calling around, you're trying to get credit,
Yeah.
you're probably not going to find
weird.
it.
Oh, so
Yeah.
frustrating. Like when you need it, they say no.
Yeah.
It's every time.
Every time.
That's what it seems like.
Yeah.
But when
Unless
you
you've
don't,
already been pre-approved. And
right.
it's just
Yeah. It's just
like for the
for
credit cards,
and
like if
stuff
your
like
banking
that.
app keeps telling you you're pre-approved for one for a limit
Yeah.
increase and you're at limit, go ahead, take that limit increase, because they'll
Right.
probably process it right away because they've already pre-approved you in their system.
Yeah, if you get a pre-approval for stuff
Yeah.
like that, it's I don't even think they do a credit check. I think it's
No, they don't.
available in their system. Yeah. So, but it's just something to think about. Yeah. So hopefully that helps. So 3 things that you can do to maintain your credit.
Yeah. Or increase your score a little bit.
Yeah.
Yeah.
All right. Okay, cool.
Yeah. Thank you so much for watching.
See you next week.
Bye.
Bye.